afterwards, or?
Yeah, we've got you're happy to take as much of the streaming as you want.
Cool.
All right, here we go. Ladies and gentlemen of the interwebs, welcome to the Beacon TVL show, the weekly podcast from Beacon DeFi, your beacon in the world of decentralized finance. I'm your host, Professor Chris. We've got a great show lined up for you as we tackle the news of the week that's relevant to you, our dear users in the world of on-chain investing. Today on the show, we have from our friends at one of the oldest and biggest liquid staking protocols in all of DeFi. We have Stater Labs representing their new AI-powered hot coin radar app, Cabbage. We have Antonio on the line. Welcome, Antonio. How are you, sir?
Thank you very much, Chris. It's a pleasure to be here. As you say, so Stater is the old guard in terms of liquid staking, and it has now launched a product for trading in Solana. This is called Cabbage, and it's what we will be discussing a little bit today. I'm very happy to tell you all the nuts and bolts about it.
Wonderful. Thanks for being here again. It's a true honor to have you here on our show. And a gentleman who I've met multiple times in person. We met in Denver. I want to say I saw you in Vegas as well, but also most recently in New York City for Permissionless from the venerable team at on mainnet, for Term Finance. We have founder and CEO Dion on the show. Welcome, Dion. How are you?
Yeah, thanks, Chris, for having me here. Really excited to be here and speak to the community. Term Finance, for those who don't know, we're a fixed rate lending protocol on mainnet and other EVM chains. Actually, one of the longest running fixed rate pure play lending protocols on the blockchain.
Wonderful. Okay, let's go ahead and get started with the first thing we always check out, and that's not only the news, but we're going to check out the charts right now because, guys, we're in a situation where we are less than 4%, well, really actually 2% away from an all-time high for ETH, which we got there December of last year based on some really bullish news, but man, 47.16 for ETH. We've got let me bump up the zoom here. We've got 121,581 for Bitcoin. We touched a new all-time high over this past weekend. The market is ripe for explosion for risk-based assets. Right now, I mean, we'll look at the bubbles as well. This is another thing we always check specifically. We'll look at the week difference first. And really, it's just all green, which is fantastic. Arrow also going on a tear. I think a lot of this has to do with Coinbase.com bringing the DEX up, which is really just propped up a lot by Arrow. Looking at the month view, we're just seeing a lot of green, which is good to see. One thing I wanted to bring up to you guys to just kind of talk about is this is a tweet from Rect Fencer that I don't really know how to interpret it, to be quite honest, because there's just so much going on. But looking at the specific numbers for the major, I guess these are all the major treasury companies. And when we say treasury companies, these are publicly listed companies that have actually taken equity or any type of raise, and they're actually using it to purchase ETH, using it to purchase BTC. There's also treasury companies for Hype from Hyperliquid, for Tau from BitTensor. BNB is one that's come up recently with, I think it's BNB, I forgot the name of it. But anyway, we've got XRP as well as Sol with DeFi Dev. All large companies creating war chests based on the way that this bull run is going to go on this next leg up, that we're going to see a lot of interesting moves. So I'll start with you, Antonio. We're just in a very interesting part of the market. What have been your thoughts about how the market's kind of progressed especially over the last 2 months?
Asking in particular about Ethereum or in general, right?
Just in general, yeah. Just your thoughts.
Yeah, I think that there are a lot of bullish catalysts for crypto in general, both for BTC and for instance the passage of the new Genius Law. Seems that treasury companies are being the ones responsible for major price increases, and we start to see a lot of bearish voices on what these treasury companies could do once the price starts going down, and they might have to unwind. But I think the consensus is that we still have, this bull market still have much legs to go, right? And I think indeed we are going to go higher. I still recommend people to trim a little bit the positions on the way up.
Completely agree. What do you think? What do you think, Dion? What's been your thoughts just kind of seeing this from the sidelines over the past couple of months? I'm very curious about your thoughts.
Yeah, it's interesting. We had a big run early last year, and then the markets kind of stalled out for a bit, and recently made another big run with Bitcoin hitting all-time high around like 122K, I think it was. ETH, on the other hand, for a long time was totally left in the dust. Bitcoin broke its last cycle high over a year ago of 60-ish K, 67K, and ETH had been struggling to even reclaim or get near its prior high. So now we're getting close. Finally, there's been a big run up, and it looks like it's poised to break through. It's not there yet. If we do it, I expect the market to go parabolic. It's typically how these markets go. Once you break a major resistance level, kind of everybody just jumps in trying to find the new clearing rate, the new clearing level in the market. So short term could be bullish, but we need some confirmation in terms of price action to see whether or not we can break through for ETH.
Yeah, completely agree. For the first part of the cycle, at least since the election, ETH has been quite the lagging asset, and it really wasn't until about late April, and within our mastermind, Andrew, our CEO, definitely called the bottom of the ETH BTC ratio, and we've definitely seen a lot of movement upwards. I think you can say definitely the bullishness of all of the pro crypto legislation coming through the U.S., the establishment of these treasury companies. These are not small buys, guys. We're looking at like $50 million just for hype. We're looking at Tom Lee's Bitmine coming through, wanting to own 5% of all the ETH supply. That is the goal of Bitmine with Tom Lee. So, Antonio, are you bullish on the movements of all of these publicly listed companies coming and buying ETH and BTC and other assets?
Yeah, I think especially what we're seeing is that a lot of treasury companies are coming into ETH. We're seeing some other treasury structures being created for some altcoins, but I think only BTC and ETH are relevant, I'd say. And what's interesting is that the people that are leading these companies are actually respected OGs in the Ethereum ecosystem. Now we're talking about Tom Lee, we're talking about Joe Lubin. For the Ether machine, we're talking about Andrew Keys, right? So we're not talking about some upstarts and people with a shady reputation. We're talking with people that understand the Ethereum ecosystem very well, and they are surrounding themselves with a good board of managers. So that speaks highly to me of how this Bitmine, Ether machine, Sharplink could be doing in the future. I think it's very bullish for ETH, not just the fact that they're buying ETH, but the quality of the people behind these movements.
No, I completely agree. What do you think, Dion? Do you have any additional thoughts on that before we move on?
Yeah, no, I think it's very bullish. I think the ETH ETFs were the first foray into having accessible crypto in traditional portfolios. But ETFs are kind of limited. So with this new treasury product, it's just another vehicle for people who want to enter into the crypto space, but don't have access to Coinbase, either because they're in traditional RIAs, retirement funds. It just creates new ways for monies that otherwise is not accessible to crypto to now come into crypto. And I think what is particularly interesting about the way these ETH treasuries are set up, following the strategy of issuing convertible debt, is it really is a whole package where everybody wins. The underwriters, the investment banks, they make fees, pipes in issuing this debt. The convertible bondholders get a call option on ETH So market makers love to trade and scalp gamma around that. So they're natural buyers of the debt. And then for the equity holders, they get levered exposure to Bitcoin and ETH, which they can't get through the ETFs. So it's really kind of like the perfect product at the perfect time, and it's bringing a lot of liquidity that is previously unable to tap into crypto, giving them access to the crypto market. So anytime we get new adoption in crypto, it's great for the community, and that's when we have these big bull runs. And the fact that these treasuries can now also deploy into DeFi, I think that's super bullish. A lot of the people running these companies, as Antonio mentioned, are DeFi crypto native managers. And so they're more open to bring that capital into DeFi, and it's kind of a flywheel effect. And lastly, also as Antonio mentioned, there is that kind of credibility aspect. When you have publicly listed companies doing crypto, doing DeFi, acting on the blockchain, that just brings a new level of, credibility to the space, which is always good.
I mean, you're right about, various people starting to learn more about DeFi, and none other, in my opinion, than possibly former Congressman from Florida, Matt Gaetz, who just out of nowhere decided to say that he claims that he has bought Pengu, and he then shrugged at the idea of digital penguins. And this is why we love free apps, because the comment section is going absolutely nuts for this take. I saw this, and the first thing that came to my mind was, is this top signal? But hopefully it's bullish for Pengu. Hopefully it's bullish for the Penguins overall. We'll go ahead and move on to the next thing on the list. And I need to grab this link because I thought I had it, but I do not. And the link on that is that Paxos is going, well, they've already applied with the Office of the Comptroller of the Currency for a national trust charter. What this means is it's going to create a bank-like structure that Paxos will be able to work with. This is actually, something that I expected from them to lead with, to be honest, because as part of their global dollar consortium, I think that's what they're called. They have many members within their consortium. In fact, they have Anchorage Digital inside their group, and they have actually had a money license to operate in all 50 states since midway through the Biden administration, honestly. So this is actually a move I expected them to do. I'm surprised it kind of took them this long, but this is actually good for them. And I think all now 30 members of the consortium for USDG. Paxos, a long-standing, we can call him a good guy in this space, because when we were first coming up, talking and educating, USDC, we liked what Circle was doing because they were actually provided monthly attestations. They were transparent with proof of reserves. The other group that did that was Paxos, and they were the custodian of Binance's BUSD. So, good to see Paxos leading the charge here, being a source of really just not necessarily innovation, but just moving everything forward. They're creating a consortium where all members in USDG can share all of the fees. And again, when I talked about this on this show, now coming on 9 months, I mean, the main reason why institutions were going to be excited was because, Tether posted 2.5 billion in profits in Q3 last year. We talked about this last week. They posted 4.9 billion in profits for Q2 this year. So this is institutions are paying attention. And I think that could be a story where they create something that more institutions come into rather than trying to create their own stable coin, because the market's getting a bit crowded, to be honest. So we'll see exactly how this kind of works out. Deanna, I wanted to start with you. Having more of these stablecoin issuers now also having banking charters. I know it makes sense, but is this something from a DeFi perspective we should be bullish on or cautious about?
I think it's a great thing with these, banks starting to issue stable coins. That makes on-ramping a lot easier.
Right.
Traditionally, if you try to get somebody like my dad to use crypto, it's like, all right, set up Coinbase, deposit, wait 4 days for the ACH. Now you got to set up a MetaMask, move it over. it's very hard for people to onboard unless you're really very committed. But now, if you can just set up a bank account, have your salary direct deposited, and transfer out stable coins, with no friction, I think that's huge. It brings on a whole new group of users who could potentially come into DeFi eventually. It won't happen right away. But the more stable coins that are already on chain, the easier it is to widen the distribution. So I think it's very bullish.
How about you, Antonio? What are your thoughts?
Yeah, I think in general it's very bullish to see all this. There are concerns about the fragmentation because, like with Stripe going with their L1 also this week,
Exactly.
Circle also announced their L1. So it seems that what's not clear yet is how interconnected these L1s are going to be, and whether this is going to fragment the liquidity of stablecoins even more, right? So I think that's the only negative point that it's yet to be cleared about how interconnected the stablecoins could be, right? Because otherwise, people are saying, otherwise I would just use banks, no? Where I know already that I can easily send money from Chase to Bank of America, etc.
I think you brought up an excellent point as to why this move makes sense for Paxos, for Ripple, for Circle, because they already have they're forming these partnerships. We talked about last week. Chase and Coinbase now have a partnership, so Chase can easily bring their money into customers. Chase money customers can redeem points for USDC. They can also easily get in using Base Pay and all that type of good stuff that Coinbase has baked up. So we're going to see. It makes a lot of sense for more of these stablecoin issuers to come up to TradFi, set up these essentially will be relays for a lot of these merchants to come through. And I definitely am going to expect a lot more Web2 and retail partnerships just to make it very easy, because as much as I want to see what Walmart is going to do here, because Walmart and Amazon are going to be two very large pieces of the puzzle with how we transition into stable coins in e-commerce. It makes sense for them to partner with one of these three that have already done it. They have the relationship with the president. They have the relationship, with the OCC, and we should be good to go on that. So yeah, keeping a close eye on that. We're going to talk a little bit more about stable coins in just a minute. I did want to go and talk about this particular one as well, because at least for me, and probably Antonio, probably you as well, Dion, this actually is something we all live through, and that is the that would be the fall of Luna. And Do Kwon has been extradited. He's been waiting in a cell for a minute. He had a no guilty plea. He is now flipped to guilty, and he's going to be accepting a max 12-year sentence and a $19 million fine. It's not a lot of time, and that's not a lot of money. I mean, technically, it is a lot of time. Let's not minimize that. But God, it makes me think. I don't know if you guys saw this live, the Up Only podcast with Kobe, where he had both Martin Shkreli and Do Kwon on the episode, and Martin Shkreli literally told Do Kwon, prison is not that bad, in a very interesting, just an interesting moment that I'm never going to forget as long as I live. I guess the question is, now I have to be very specific in reading what he is pleading guilty to. He's saying that he told a judge that he knew that the peg for UST or Terra USD had not been truly restored at the time of this attack on that mainnet pool that caused the backing issue at Curve. And he made the statement about that. He made the statement about the BTC backstop, and that was all not true at the time. So that's where the defrauding of users and breaking international laws comes in, and that's what he's pleading guilty to. Regardless, I wanted to start with you, Dion. If this is something that actually hits you at the core, do you think this is justice for Terra investors?
Yeah, I think there's two pieces here. I think most of your average crypto guy would think of Do Kwon signing up this stable coin that was not so stable, and people lost a lot of money on the promise of 20% APR.
Yep.
And then there's the other side, when it was collapsing, things that he said that were misleading and false to try to keep the bank run from happening. It sounds like that's what he pled guilty to, was that, as it was unwinding, unraveling, he made some statements to try to shore up confidence that were false. And, that is absolutely fraud, in terms of what's the right sentence and fine for that. I'm not an expert in Korean law, but I imagine it was on the heavier side because they want to make an example out of this. I was definitely around during that collapse. Personally, I never got involved in the UST trade because it just didn't make sense. How do you do 20% APY fixed for such a long period of time? So I think, the mechanism was a mechanism. If you read into the docs, you knew it was backed by the Luna token, and they would print Luna token to shore it up. So, logically, it was a Ponzi scheme, and they weren't lying about that. So I think it makes sense why they ended up pinning him on these statements he made, because as far as the underlying algorithm, that was the algorithm. People weren't reading about it. I guess that's what consumer protection is for. People who don't have the time or energy to look into the details, maybe there should be more protections and blockers around preventing those people. It depends on politics, right? If you're libertarian, you say just do it. Everybody's a big boy, do your own homework.
Yep.
Some people might say, no, we should protect consumers. They can't be expected to do all the homework, so let's just block them from using this altogether. That's what securities law in the US is for. My personal view on kind of interacting with the protocol, I'm more libertarian. I'm like, look, do the homework or don't touch it. But if you touch it, it's kind of on you to do your own homework. But yeah, definitely. After it started to unravel, those false statements should absolutely be punished by law. And it seems like that's where they ended up.
Yeah, I think we've reached a consensus about where this is going to go. Antonio, do you have any thoughts before we move on? I know you've been in the space a long time.
Yeah, I was also impacted at a personal level. Actually, Stader, for example, it's a parent company of Cabbage, had $1 billion of TVL in their run, then that actually collapsed to zero. Mm-hmm. I think in general, innovation shouldn't be punished. So I agree that there have been false statements, and he will need to be charged for that. But I personally just hope he does get a light sentence. Because all in all, like for example, if I just have to compare with Sam Bankman-Fried, SBF from FTX, the characters are very different, right?
Yes.
And I think one was value adding to the space, and one wasn't value adding to the space, and one was really doing ill, knowing very well what he was doing and commingling funds, right? So if I had to choose who gets a light penalty and who gets a longer sentence, I have it very clear. Yet still, we have a lot of rumors that Sam Bankman-Fried will be released. Will be
pardoned,
etc. Yeah. So I think in general, this also taught a very good lesson in risk management to a lot of people, me included. And that's it. It's all about learning for the next cycle.
Yeah, it was a very painful lesson for myself personally as well. Just chasing yield, I decided to take my Luna and UST over to Osmosis, where there is a 21-day unbonding period. So yeah, I learned that lesson. I just waved goodbye. I'm like, all right, let's try and heal the community. Because and as you said, Dion, 20% for stablecoins is like the holy grail, which has been eclipsed and is regular amongst a lot of stablecoin pools now. So it's amazing how much can change in a couple of years with regards to the way concentrated liquidity has really changed the game, with the way Athena and all these other mechanisms, even stuff like Hermetica, and some of these other new things that are coming about. So talking more about stable coins, now that the Genius Act has passed, Circle's gone IPO. One thing I've been talking about for the last 9 months on this show, we've done this show every Wednesday since 2021, The stablecoin tsunami is coming. A lot of things were put into place, even some of these ETFs for Solana and stuff, on the back of Trump getting elected and bringing a pro-crypto group into the cabinet. So now we're going to actually have something that, honestly, I still don't quite know what to think of, and that is stablecoin only blockchains. Now, to kind of point those out, the first one we have is Converge. This is from Athena with Securitize. They're going to be doing, just regular digital dollar, RWAs, that type of thing. Obviously, with Securitize, that's a given. The second from Bitfinex is Plasma. This got a huge pre-sale from a lot of whales that I know in my circles. It's dedicated to USDT. I think they're literally going to try and out Tron in this case. And again, it's just a stablecoin blockchain where it's centered around USDT. And now we have ARC. This was announced, I think, this morning or yesterday. This is part of Circle, from what I'm hearing, and it's a layer 1 blockchain. USDC, native USDC, is the gas token for this. There's going to have all the corpo stuff that people are looking for. A new consensus agent called Malachite, I believe is what it's called. And this is going to be another. It's from Circle Intergroup. So we have another layer 1 dedicated to just stablecoin farming or just stablecoin protocols. I think there's already an NFT group that's looking to already launch on ARC. And definitely this part of the cycle was not on my radar just yet. But now that it's coming, because all three of these, none of them are live yet, but they're getting there. That they hopefully will be live by Q4. I'll start with you, Dion, since what you guys do with Term, this could be something that may be available to you if enough cross-chain 4626 vaults get it established. So what are your thoughts on something like ARC and Convergence and Plasma?
Yeah, I mean, they're definitely on our radar and actively working, and getting ahead of these new chains. And I think having it be the home of these major stablecoins could be a big source of liquidity. I think one thing, that Term, as well as a lot of DeFi protocols, are facing right now is that I think there are unreasonable expectations for yield in DeFi. A lot of it funded by token airdrops, pre-token launches. And so it makes it really hard for markets to clear at a normal market rate, at a commercial market rate, when expectations for deposits are 15 to 20% plus. Borrowers want to borrow at the Aave rate. You just can't really match a market like that. And I think with these new stablecoin chains, where the stablecoin issuers themselves will be incentivized to promote liquidity in stablecoins on those chains, will be a big unlock to hopefully tap into institutional, high net worth, commercial capital that won't be chasing 15 to 30% token incentive yields. So I think it's very great. I think it's great.
And I think you hit it on the head. I think a lot of this is pointed towards institutions, and you're not going to see Euler and Morpho and Contango style rates. You're going to see more like what you're seeing on Aave. Antonio, your thoughts before we move on to our next segment.
Yeah, I think it's going to be very interesting. You mentioned Plasma. Plasma is actually not a chain from Tether. It's a chain that it's using USDT as the gas fee, but it's not from Tether.
It's from Bitfinex, right?
On the contrary, ARC is a chain from Circle, right?
Yeah.
And I'm very interested to see how this is going to play out for Circle. I don't very much understand why they're doing this, because this is going to put them at odds with all the chains. You had a situation where Circle and USDC are very connected to Base, and that was alienating a lot of L1 and L2s. Like if you're Solana or if you are Arbitrum, you need to be careful with USDC and Circle, because at the end of the day, their home base was their headquarters was Base. And now they're even spinning up an L1, right? So I think that relationship between Circle and chains is going to be very interesting moving forward from a DeFi perspective. And they're also using that distribution and those rails that they have, as Stripe and other companies are doing. So let's see how it plays out for them.
And I think you hit it right on the head, right? Distribution. And I think that's where ARC is really going to come into the strategy, especially with Tempo from Stripe coming soon. I think this is where we're going to see possibly, because everything is off chain for CCTP, right? With regards to, what they're doing, with seeding native USDC. What if that clearinghouse becomes ARC? I think that's a possibility that maybe a lot of people are kind of curious about where this is going to go. But this would give them an on-chain treasury, I guess you could call it, where they could actually do a variety of things. They could do market making. They could do liquidity vaults. There's a lot of things that could happen from an infrastructure standpoint behind the scenes that could be that adapter that anything could hook up to, whether it's going to be a neobank or these decentralized neobanks, the DO banks as well. I think next year is going to be very interesting from an infrastructure standpoint on how regular people are going to be able to use digital stablecoins in their everyday life. And I think ARC, Plasma, and Converge are going to be very big parts of the orbit that I think will shape that policy. Again, this is all super early, obviously. This could change within 2 years. Who knows? But we'll see. Anyway, before we head to our next segment and talk with our panelists, I did want to say, thanks to everybody who's viewing from all the communities. This is our community. This is Total Value Locked, our free group from Beacon DeFi. If you're curious about learning more about decentralized finance, please do me a favor, check us out. It's absolutely free to join. School.com/Beacon. Join the many, many, many people who have come. Check out our Start Here post if you want to get a message from myself and Andrew, our CEO. Learn more about our Introduction DeFi course. We have a lot of free content on here. And if you want to learn more, you can take the Beacon Challenge, which many people have already done and are already out there making their first dollar in DeFi. Or if you want to be amongst the best, you can join our Beacon Mastermind, where you get the best experience possible being onboarded into DeFi. I also wanted to highlight and I clearly don't have, there it is, our partners at Awaken. I have assets. Okay. Thanks to our partners at Awaken.tax, you can get your crypto tax report done easily and efficiently. They take customer feedback seriously and make changes quickly. All my homies use Awaken.tax, and for you get a fantastic 25% off your report when you use our referral code of Beacon DeFi. Again, Awaken.com, Awaken.tax. Sign up and ref code Beacon DeFi. Get 25% off if you want to do that. I want to say thank you to Andrew and the team at Awaken for being one of our great partners. And I will be doing my taxes very soon, just so you know, IRS, whether you're going to be there in a couple of months or not. It's kind of crazy how things have worked out. But let's go ahead and move on to our panelist for this week. We'll start with you, Antonio. Thank you so much for joining us today. Tell us a little bit about Cabbage. And this is a really great project. We were very fortunate. We were one of the first half dozen groups to actually get access to Cabbage, and our group has really been, it's been a real force in a lot of our group making money on finding great coins on Solana.
Yeah. So Cabbage is an AI-powered trading platform in Solana. So what we're doing is, as you probably know, Solana is pretty much the home base for meme coins. And it just has a huge amount of coins getting out every day. Very difficult for people to actually find the alpha, knowing, which coins are actually worth pursuing, which ones are very likely rugs or are gonna very likely end up in the trash. So what we do is that we apply a complex algorithm to evaluate different parameters of coins, like who has created it, how well distributed it is, what are the social handles and how much traction is it getting, how much noise is it getting. And then we just give a short list of what coins are interesting for people to pursue, right? So Since inception, Cabbage has a win rate of 71%, right? So 71% of the coins we call actually go much higher than what we call. It's very typical that at any day you are going to find 5x, 10x, 50x, 100x's. Of course, it's a tool that requires some understanding. I always tell people that it's better, to do small tests, to put very small amount of SOL until you understand how the platform works, and in general how meme coin culture works, right? And so you learn also how to set up stop losses, so you are able to get out in time whenever a coin is not performing as you wanted, right? But very, very typical. For example, I see right now in the main landing page we have useless. Useless is a coin that we called when it was around $50,000 of market cap, and it did a 2,235x. It's the type of coin that if you get early when we were calling it, it's really life-changing. So the cool thing is that this is not like 1 in a million times that we do these calls. Like, as I say, every day you will have 5 to 10 different calls that end up doing 5x, 10x, 100x, right? But it's just a tool to have everything in one spot, so you don't have to open CoinGecko and Dex Screener and Axiom, etc. You have everything centralized in one terminal. So that's a little introduction about Cabbage. Happy to answer any follow-up questions if there are any.
Yeah, one thing I wanted to ask, and what I liked about Cabbage is we were testing it in the early stages is, and this is something that's important for people to understand with regards to security. Whenever you sign up for Cabbage, it actually creates a wallet for you. And this is the very important part, because you definitely want to have this compartmentalization from a risk standpoint. So that's great that you guys are doing that in terms of having an independent wallet that someone is going to fund specifically for that. So when signing up for an account, really I think it's all just based on email or social, right? Are you using Privy for that on the backside?
Yeah, so indeed we have that. We think that you should trade meme coins from a different wallet where you have maybe your SOL or your long-term assets, your blue chip assets, right? So there is that compartmentalization. Of course, you can just trade the private key, the seed phrase, and do whatever you want with it. One thing that there are some other security things in place. What we also have, and it allows us to do with having a compartmentalized wallet, is that we have a very, very generous reward system in which you are going to get 40% of the swap fees from the people you refer. Actually, it starts at 40%. It can go all the way to 55%. It also allows you to share particular links of a token you really like for example, this useless coin we were seeing. You are able to share that with people, able to embed it into your social media very easily. And we have as I say, really generous program, because what we want is that people try the app and understand that moving forward, you can do everything from one spot, right? You don't need to add Dex Screener and all these analytics pages that take up a lot of mental overload, and you might end up with 60 tabs open in your computer just to see the parameters of a couple coins.
Yeah, I see that it's actually, the UI is quite different than what it was when I was looking at it most recently. So this is nice to see. Question I had was, based on, again, thanks so much for allowing us to access this so early with our mastermind. What have you guys learned so far in both the stages of both the AI powered feed and the degen feed?
So the degen feed is a feed that just needs to cover a couple parameters, but it's normally going to be making calls at a very, very low market cap, right? Like $50K, $100K. So the upside potential is huge, but it doesn't tick all the boxes that the AI feed will have, right? So AI feed normally will call the coins at a bit of a later stage. And so maybe you don't have that opportunity of having a 500x or a 1000x. You're probably going to make a 5x or 10x, right? You can see, because you're having it side to side, you can see there are many more X's in the degen than in the AI. But basically, we are refining daily this tool with a lot of feedback from degen users. That's why when you were granted access into the closed beta, it's very different from how it looks like now that it has been in a public launch. And we are continuously doing improvements. Every few days or every week, we are doing improvements with the feedback we receive from people. But I'd say the most important KPI for us is that one, the win rate, that we make sure that we are, like, the coins we're calling are actually being a banger, and it's not only that 71% win rate I'm talking about, is the fact that you really can hit 100x, 500x. And, like if you put 0.1 sol or 1 sol in one of these coins and you do a 100x or a 500x, we are talking about really serious amount of money, right? If you are able to later scale down, take profits out of it, you can really make it, as they like to say in this industry.
Yeah, no, it's great. It's always good to have smart tools for stuff like this. I think.
And by the way, Chris, so this doesn't work. This works for all tokens in Solana. So it's just that 99% of the tokens in Solana are meme coins. But when you hit when we see that smart wallets are starting accumulating a certain token, we are going to make that call. And so that token could be a strong DeFi token like Drift or like Camino, any Jito, any token of the top 10 DeFi protocols. We might also be calling it. We have called it in the past. For example, we were able to call Camino because a lot of whales started accumulating the token, and then it did a 2x from there, right? So this is just to show you that it doesn't specifically work for meme coins only. It can work for any token, wormhole, or any token in Solana. And if you play properly with the parameters, you're able to set up, what's the market cap upon which you want to start fishing coins, right? So the tool has a lot of potential, a lot of flexibility. It's very modular. It really depends on how the end user wants to use it.
Exactly. And one tool that we have used and we've talked about in our mastermind is GMGN. I think this is a much more concise version of that, and I think that's really good. So my next question is, from a roadmap perspective, are we looking at possibly more chains? Is this going to be just a Solana only thing? Really just kind of wanted to also get just to the head of, from a, with what Stater has traditionally done. What was part of the decision to kind of pivot this way?
Yeah, so Stater is always looking at ways to expand revenue. And so in terms of liquid staking, we are live on 4 different chains, 3 of them EVM, 1 of them non-EVM. And we just saw the potential that meme coins have in Solana, the amount of trading volume and the amount of fees that you can generate with that volume. And we have been observing the Solana ecosystem for a while, for at least a couple of years already. We, at the time, even thought of having an LST there, but we saw the space was very crowded. And so we used that knowledge we had to actually start building this AI-powered terminal when we saw how the meme coins volumes were exploding.
Love it. Any questions, Tian, before we kind of wrap up on this one?
No, it looks very cool.
Yeah, I've been really pleased with the way that it looked. Yeah, it's definitely a lot more refined. I think I'm really enjoying what I'm seeing here. So, yeah, last thing, Antonio, anything on the roadmap that you want to talk about that we can share with our audience today?
Well, we're going to keep refining the tool, adding any feedback. In terms of tokenomics, you are going to start to see that there is going to be a tokenomics change, and you're going to start seeing rewards for high volumes for active users. So we're going to introduce all that gamification around tokenomics now that the project, now that we have the full release in mainnet. Right. So what you're seeing now, Cabbage Clash, we periodically have some tournaments. This one was 120 Sol reward, $20,000 reward, basically. And we're going to have a Cabbage Clash session 3 coming in the next month. So always gamifying, making it fun for people to trade and to also spread the word, yapping, in Twitter, etc.
Yeah, absolutely. I just wanted to also ask, where did Cabbage come from?
So the name, imagine the name. It was a brainstorming. We just wanted to find a food-related name or a name that would be friendly for users. In the end, we want to show that it's a tool to make friendly the meme coin world, which is the trenches, which are so complicated, and without the proper tools, it's very unlikely you make money, right? So by having a good grasp of the analytics we show, like bubble charts, like the amount of smart wallets or the amount of dev wallets, how concentrated the token is, we expect that this is the kind of intelligence that allows people to have a good win rate.
Oh, and I see you have bundles here too. That's very important. That's what a lot of people are still trying to wrap their head around with regards to how bundling
So
works.
you need to tick like 6-7 different boxes in terms of smart wallets, in terms of bundling, in terms of price action, for us to be actually calling a coin, right?
Yeah. No, that's very true. So I love that all of this is being trained. It's just going to make the system better. Yeah. No, I think probably the one question I have left is, you've used the word terminal a couple of times. Is there a chance that there's going to be like an agentic kind of interface to this at some point?
Yes, it's part of the roadmap.
Love it, guys. This is Cabbage.app. A really fantastic app. If you're in the Solana ecosystem, you're looking for a nice way to take some of your portfolio and just, check it out. See if you might catch a flyer. This is a definite product for that. Again, have to put out the not financial advice. Do your research on this type of stuff. I would probably just stick with the AI feed overall. You can, of course, check out the DGen feed, but never over invest in this type of stuff. Never put 100% of your stuff in anything. You definitely want to diversify. I mean, for me personally, in our team, we would generally recommend 2 to 5% of your portfolio into stuff like this, because you never know. I can tell you, I publicly fumbled Peanut and Fartcoin, just kind of moving things around. And maybe if I would have listened to something like Cabbage back in the day, if this was around, we could be doing this from my yacht. Who knows? But I'm going to manifest it. There will be a yacht at some point that we can do TVL from, even if I have to rent it for an hour. The day will come, ladies and gentlemen. The day will come. So, Antonio, again, thank you so much for being here on the show. This is fantastic. Again, check out Cabbage at cabbage.app. And thanks for telling us about
your
this.
time, Chris.
Yeah, man. Really, really appreciate it. Dion, term finance, my friend.
Yes.
I remember the first time we talked about this, or actually with Billy, in your community, told me a little bit about this. I thought it was good, because one of the first things that I think is the most relatable mechanic for people trying to get into decentralized finance is loans. So anytime you can get a good loan product out, that's always really cool. So you actually have quite a few really interesting tools here in the toolbox. So please take a second to introduce term finance here to our community.
Yeah, so the idea for term really came out of my time when I first got into DeFi. I was a DAO treasury manager. And it's actually in that role, managing DAO treasury, that I started to notice, gap in the DeFi ecosystem. So Aave is a great lending protocol, extremely deep liquidity. It just works well. The problem, though, is as you're kind of managing liquidity, you don't really have any clear insight into, what is the yield going to be for next month or the next quarter. And it's really hard to plan around that. Similarly, with the way that kind of these interest accrues over time, I never really know how much I earned. I think it's very difficult to go back and try to track that I actually make 3% or 4% or what is my rate. So that's on the lending side. And then on the borrow side, borrowing against Aave, you have these situations where the market gets really hot, interest rates start to spike. And when you hit that kink level, you see borrow rates will hit upwards of 60% multiple times a day. And so it's just, very difficult and very painful to borrow under those types of circumstances. So prior to crypto, I was a government bond trader, fixed incomes kind of in my background. So it seemed like, all right, DeFi, if it's going to grow up, we need to do fixed rate lending. And so that's what Term is about. How do we do fixed rate collateralized lending on chain? You can think of it as Aave, the only difference being that you get a fixed interest rate for a fixed period of time. So that's Term. Initial product, kind of primarily geared towards power users, is using weekly auctions to match bars and lenders at a fixed rate. This is kind of the initial product. Given kind of the time constraints, and having to have a feel of where you think the market is, primarily has been geared towards power users. So anybody is free to use it if they want to play in the auction. As we kind of heard from our users over time, we built out new products, kind of make it easier to access these fixed rates that are generated through these auctions. So the first product we came out with was the Blue Sheets or Earn page. So if you click into the Earn page, you'll see that some of these underwriters who lend in the auction, they can turn around and sell those loans in the secondary market. So here you can kind of shop for an interest rate. You can click on the details to see what it's backed by, how much collateral is backing these loans. And if you want to lend into the specific loan, you just click the Earn button, single click, you can come and earn this fixed rate, at your convenience. So this is very popular for people who want to know exactly how much they're earning, know exactly when they're going to get their liquidity back up front, and have full insight into what's backing these loans. And then the latest product that we deployed are the vaults. So the vaults, this is kind of full automation. We have risk curators who will come and manage these portfolios. You can think of vaults as a money market ETF, where risk curators are going to deploy your capital into fixed rate loans. Any capital that's not deployed on Term is typically deposited into something like Aave. So you get very low risk, high quality loans and risk to DeFi protocols. Kind of just to see like a demonstration, if you click into the Shores USDC and click the holdings, you kind of see what's going on under the hood. So here in this position, you have around 34% of the vault is deposited in Aave, so super safe, earning the Aave rate, which is around 4.5%. And it's got one fixed rate loan against a PT Athena token that's earning 7%, and that's maturing in September. So it's kind of like a managed bond portfolio, so to say. So this is for somebody who wants to just kind of deposit, set it and forget it, and not have to worry about managing and redeeming and reinvesting loan proceeds.
Just a quick question on this, since you are using Pendle on the backside. How do you guys handle the maturity portion? Is there a good timer on there just to remove it on the maturity date, or is it rolling over?
So for this loan, at the maturity date, it will have to be repaid.
Okay.
And then the curator will then determine what are they going to do with the money that's been redeemed. Got it.
Oh, that's great. Yeah, this is really compelling stuff. I really love that you're doing the MetaVault stuff. I'm assuming that all these curated stuff is through 4626 vaults. So I guess my question on that is, how has the innovation of cross-chain 4626 vaults changed the way that you can provide services to your customers? Because I think cross-chain interop for me in the last 12 months has been a real game changer for DeFi, and makes it so much more robust in how you're taking what you're depositing and rehypothecating throughout the system.
Yeah, I think for distribution it's great because right now we haven't fully integrated cross-chain, but you have to deposit vaults on every single chain. That creates fragmented liquidity, and it just makes it hard to get to kind of that tipping point in terms of scale. So having cross-chain vaults allows you to centralize liquidity again in one place and do all of your operations from there, while getting distribution through these various different chains. So I think that's a huge I think that's going to be a huge unlock to growing DeFi protocols overall.
No, I completely agree. Is there any chance that you're possibly going to make these vaults accessible to other protocols, or is this all just going to stay on term?
So these vaults are totally permissionless.
Okay, perfect.
Anybody can become a curator. If they are a curator, they can choose what the idle vault is. So right now, for our initial batch, we've set Aave as like the safe idle vault that the vaults deposit into. But curators can choose anything. If you want high risk Morpho Vault, you can choose that as the place where idle funds are swept into. So really, it's kind of up to the user, and there are all those smart contract enforced constraints in terms of duration of the portfolio, how much must be liquid in the reserve. All of these parameters can be set and customized by the curator.
No, that's awesome. I'm really excited. I'm really excited to kind of see where this goes. So, I noticed that Base is an option here. Can you talk a little bit about what the options are going to be on Base? They're definitely front and center right now with a lot of things going on with Coinbase. So, while there aren't any vaults here, what can we look forward to with regards to what's happening on Base?
Yeah, Base has been pretty popular for us. So, there's going to be more listings coming up where people will be able to, purchase into a fixed rate loan. Base has been a place where we've done a lot of activity, so we're going to be pushing more of that. And, actually kind of foreshadowing further out in the roadmap, we're going to start building out mobile apps that are kind of consumer friendly using Coinbase embedded wallets. So now you don't have to worry about MetaMask. You don't have to worry about signing multiple approvals. Everything can be done in a smart wallet. The paymaster will pay for the gas fees. And we hope that kind of creates a more automated experience where people can just get into a fixed rate loan, automatically redeem it, and roll it, and have all of this fully automated through the Paymaster smart accounts. So yeah, that's a big direction we're going to go towards. Is getting more towards like a Web 2 user experience. But I don't know about you guys, but right now, like doing anything in DeFi is a pain. You have to go, sign, approve. I just don't want to do it. It takes 30 minutes to do something that should take 5 seconds.
And even that's an efficiency over what it's like in what we call quote unquote the real world in TradFi, right? You have to go to a brick and mortar location, set an appointment, talk to a loan officer. They're going to check your credit, tell you all kinds of questions about what you do for a living. And this is a huge improvement, obviously, on that. But to even have it just in the palm of your hand, like on your smartphone or in your tablet, to be able to access all of this it's a dream come true. Honestly, it puts the power of all of that into your hands. And it also gives you the option to do this from a self-custody standpoint. So your assets, your keys, your crypto, whether you're being a part of just the vaults or if you're actually participating in the auction. So one thing I wanted to ask you, Dion, if you could kind of walk through what the auction process is like. So for someone who's seeing this for the first time, they're like, whoa, what does this mean? If you could kind of break down that process.
Yeah, so the auctions typically are held on Wednesdays and Thursdays. So you see a number of auctions today, and there will be some tomorrow. I guess the ones today are already cleared, and then there will be auctions tomorrow. Typically, these auctions, you can see the parameters up top. Tells you when the auction is closing, what is the term of the loan that this auction is for, the maturity date of the loan, the token that's being lent, and the collateral backing this loan. We also specify the collateral ratios. So how much collateral per dollar or ETH borrowed in this pool. So those are kind of the high level parameters. Liquidations are similar to Aave. If your collateral value falls below some threshold, then the collateral will be liquidated and everything is permissionless and on-chain. And Oracle prices are coming from Chainlink primarily, but there are backup oracles just in case Chainlink fails, in the tail risk scenario. In terms of actually participating here, you go back to the auction. First thing you do is figure out whether you want to lend or borrow. So let's say you want to be a lender. You're on that right page. You just put in how much do you want to lend. Let's say maybe you want to lend 1 ETH. the next box asks you to specify what is a minimum interest rate you're willing to lend this 1 ETH at. So look at Aave, the yield is maybe like 1.7, 1.8% right now. So if you go to the APR box, you can just type in, let's say you got to earn at least 2.5%, 2.5. Once you wrap your ETH, approve and submit, then your ETH will be locked in the smart contract until the auction closes, so a day from now. And that's it. You wait for the auction to close. Your order is submitted.
Okay.
On the borrow side, if you want to come and borrow, very similar process. Let's say you want to borrow 10 ETH, and you say, I'll pay up to, I don't know, 2.6% is the max you'll pay. And then you have to specify how much collateral you want to post. So you're required to do at least the minimum shown there, but you can always post more if you want some extra buffer against liquidations. Once you approve and submit, your collateral will be locked. And similar, you just wait until the auction closes and see if you get a loan or not. One thing to note is these are all blind auctions. Nobody sees the rate you're willing to pay. If they did, you never get a chance of lending at a better rate because they would know exactly what your bottom line is. So we keep it secret. It's a blind auction. And most of the time, if you're commercial, you'll get a better rate than you posted. And worst case, you're never going to do worse than whatever you put here. Yeah, that's kind of the auction process. It's kind of fun, but you do have to come and show up by a certain time each week. So, we do encourage people to try it. I think, it's the most direct and cheapest way to enter into these loans on term.
Yeah, no, I think it's great. I mean, this looks like something that I would definitely, take a part of if I had, a lot more time, because I think that's where, at least with what we do, being at the center of DeFi, we get a lot of our yield profiting off of the behavior of other investors. So this is definitely something that plays into that wheelhouse of what we specialize in with regards to what people can do. So if you're looking for a really easy way to really just get some really great yield, there's at least 3 options here for you, which is fantastic. I did want to talk about your token real quick, just to kind of let the group know what is the term token, with regards to the mechanics and how it's involved with the protocol.
Yeah, so the term token is fixed supply token. There was an airdrop as part of season 1. Season 2, no formal airdrops announced, and not really hinting towards one either. We don't intend to be kind of like a incentive. We don't want to drive activity purely through token incentives, because we found that retention through incentives is typically pretty low. In terms of what do you get being a token holder? As a token holder, you can stake your token, and protocol fees will be shared amongst the stakers. So, in the early days, there aren't a lot of protocol fees to be distributed. But over time, as the protocol grows, the way it works is it'll be distributed in 30-day epochs. And anybody who is staked will receive their pro rata share of the revenue distribution, which will be in native USDC.
Love it, man. Yeah, really, really happy for you guys. This is amazing stuff you guys have built, Dion. Well done on the just on the architecture, and just what you've got going on here. And anything in particular that's coming up soon on the roadmap that you can share with the group?
Yeah, so we'll be making we got some new chain launches coming down the pipeline that should be exciting. Could be related to some of the chains that you've mentioned previously earlier in this podcast.
Yeah.
But yeah, I think with those opportunities, it's always good to be early and opportunities to bring on new users. So keep an eye out. There's always good farming opportunities there. You guys are staying on top of things.
Got it. Well, unfortunately, Antonio had to drop, but want to thank Dion here for joining us today from Term Finance. It's a long time coming, brother. Appreciate you taking the time to be here. Please let the group know how they can find you.
Yeah, please check us out on Twitter. It's term_labs. is our handle there. Website is just app.term.finance. And through Twitter, you can find our Discord, through our link tree, and everything else. So yeah, I really welcome people to come check us out, play around, join our Discord if you have any questions. And yeah, we hope you guys find something useful out of Term.
I think they will. I really do think. I mean, I think it's a great protocol. I think everybody should definitely check it out. Again, the website is term.finance. Make sure you have you're taking a VPN vacation when you go, just as a heads up. Definitely check us out. School.com/beacon, absolutely free to join. And also check out cabbage.app. There's a link in the chat. There will be a link in the chat. Thanks to Greg. If you want to use our ref code to check out Cabbage, feel free to do so. Obviously, no obligation to do so. But if you want to get that heads up on the next home run hitter on Solana, thanks to our friends at Stater Labs and of course to Cabbage for giving us super early access to the protocol. You know, it's very, very cool to do that, and we've seen it go a long way. We do this show every Wednesday, guys. 1 p.m. Eastern here on YouTube, on Twitter, on all of our socials. We didn't get to retake today. I guess they're doing little updates, so we'll have them next time. We also do a free weekly training Fridays called Beat the Banks. That's going to be Friday, 3 p.m. Eastern. It's live streamed also to our YouTube and our Twitter. We'll cover something that relates to DeFi and why everyone should get into DeFi. So thanks for being here, guys. We'll see you next week, as we say here in our show. Beacons up. Banks down. Take care, everybody.